Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
We're going to bring Shachaf Bar Geffen. For those of you who don't know Shachaf is the founder of Koti, and Koti are launching a Bitcoin-type VIX indicator. Shachaf, welcome to our show. Great to see you again. Where are you calling us from, Shachaf?
I'm in Tel Aviv, Israel. Great to be here with you again, mate.
And are you locked down in Tel Aviv? What's the situation in lockdown?
Tel Aviv is in quarantine type 2 now, which means absolutely nothing other than the fact that the restaurants are not available. But other than that, we have masks and we're good.
Okay, so Shachaf, you've been in the crypto market for quite a long time. In fact, we've been traveling the crypto circuit together since 2016 or 2017. Do you feel that this bull market is similar to the 2017 bull market? And if not, what's the difference?
Well, you don't have as much ICOs now, do you? But I would say, history doesn't repeat itself, but it rhymes. So it does rhyme with 2017, but it feels a bit more mature now, with PayPal and other giants going to the space, the big funds going into it. So it feels more robust. We're very happy with the way things are right now. We've been waiting for this moment for quite a while, been sitting on a few things. Now everything seems ripe.
Okay, now you founded a payments protocol called Koti. You guys have got a big, thriving community. Tell us a little bit about what's happening at Koti.
Well, Koti is we have our own chain, DAG-based chain. We're doing payments. We're already working with over 100 merchants, very strong in the gaming space. In fact, as we speak right now, we're just announcing another partner for blockchain dollars going live, going from test into production. Some heavy hitters have recently joined. We're processing, with a run rate of over $150 million a year now. Not a lot of companies do that entirely, but specifically in crypto, it's even harder. So we're doing all of that. We have a card coming soon, debit card coming soon, and a few other things we've been sitting on.
So certainly Koti seems like one of the ones that emerged from the 2017 market. A lot of the ICOs and everything else has crashed, but it looks like Koti is really pulling through and becoming one of the more thriving protocols and the more thriving communities. Shachaf, I picked up on the social media waves that Koti is launching a VIX type measurement or volatility indicator type measurement, which will measure the volatility of the market. Tell us a little bit more about the CVX or CVIX, as you guys call it.
Yeah, CVIX is a crypto volatility index. So any trader in traditional markets is very much familiar with VIX, a volatility index. In fact, when you think about it, when two people trade options between themselves, what they actually do is trade volatility. And the inventor of VIX is actually another Israeli, Professor Dan Galai. We've been talking to him recently. And the index that he has created with some partners, and then later on with the Chicago Stock Exchange, became one of the most famous and most important index you have when it comes to trading. Because looking at the VIX, or as some people call it, the market fear index, is like looking at a crystal ball telling you what the market feels and where the market is going, because it tells you what's the implied volatility in the market for the next 30 days. So when the VIX is high, or when CVIX is high, it means that the market is super volatile, super fearful of what's coming. It can be good things, it can be bad things, but there's a lot of excitement in the market. So the market is very, very much live. Now, other than that, it also gives you, there are instruments to trade VIX, many tools, but and with it, what you can actually do is build nice hedges, because you can hedge yourself from a black swan event, or even just looking at the Bitcoin price and feeling when you have a lot of Bitcoins and you're super happy about it, and some other alts, and you want to feel, hey, I want to be able to hedge this properly. So you can do that by buying a hedge at an index, buying volatility, and it's a huge thing. It's a huge thing in traditional markets. Crypto needed that very much, and we've created that, and we've created a decentralized version of it.
Now, Sharaf, the VIX is effectively how all options are priced. They're priced on the volatility as indicated by the VIX. How do you measure the Bitcoin volatility? Or are you measuring Bitcoin volatility, or are you measuring crypto volatility?
We're measuring what can be measured these days, which is Bitcoin and Ethereum. So that's what we measure. We measure options. It's the classical Black-Scholes model. And we took the formulas that VIX used and just adapted that to the crypto space, and needed to do a few adjustments. And this is what we measure, and this is what tells you the implied volatility of about 70% of the market.
Okay, now explain to me what you mean by live.
The CVIX Live Index?
Yeah, so explain to me what you mean by decentralized here. How do you create a decentralized VIX?
Yeah, so that was another key thing for us, because essentially anybody can say, hey, this is a volatility index, and just put a number, right? But why should you trust that? So we knew right away that making a decentralized version would be very important. It needs to be super transparent and clear how this thing is built, and it needs to be modular, and it needs to be a DeFi primitive. It needs to work with the entire space. So what we're doing is there's a GitHub repository with all the code, and we use Chainlink oracles. We're working very closely with the Chainlink dedicated team, and we gather the data from multiple sources. Again, everything is transparent and on-chain. We have a contract that calculates the index, and then a contract that puts it out there, and you can see the exact number. And anybody can connect to that. Anybody can build with that. You can use other systems and tools and synthetics and Yearn and whatnot just to build things with it. So essentially, it's a DeFi primitive. Maybe also important to add is the fact that we wanted to this index to evolve over time with a community of developers. So we've created a governance token for it. It's called the CVX token, of course. We're giving it all these tokens for free to users of the platform. 25% will go to Cody users. And with it, you can vote on the future of the platform. And if you vote and participate, you can also take fees from the platform because all the fees goes to the CVX holders. So that's the token that controls it.
Where are the fees generated from?
Okay, so that's a good question. Other than the index itself, we've also created the instrument to trade on it. There can be other instruments that other developers can create over time, but we are creating the first trading platform to use the index. So the index is already live on cvx.finance. And in about a month time, we'll release a trading platform. And with it, it's quite a cool platform. You connect with your, say, MetaMask wallet. And let's say you're fearful that the market is going to be volatile, or you just think it's going to be volatile and you want to leverage that. You deposit, let's say, 10 ETH, and you buy the index at 100, and now the index goes to 120. So, or let's say 125. So you just made 25%. Yeah, that's the index right there. And the trading platform will be live soon, so you can buy the index as if you were at the Chicago and buying, VIX.
Okay,
so when you trade, you pay fees.
What is this telling us now? The CVX is now on 90.90. What does that mean? Are we expecting volatility? Are traders scared? Is there lots of volatility? Or
yes. So the index goes from 10 to 200. Okay. So while 90 may seem like an average value, it's actually the highest we've seen it and measured the last 60 days or so. So that's quite high. What it tells us is that it's not that just traders expect the market to be volatile. The market is, in fact, volatile if you measure the expected, if you look at options for the next 30 days. So it means that we should see rapid changes in the market in the foreseeable future.
Does this mean rapid changes up or down, or up or down?
It can mean both. A downwards trend usually have more effect on the index. It's calculated that way. But yes, it means that even though the Bitcoin is super high now and everybody is thrilled, it means that people doesn't necessarily trust it to remain that way, right? And just looking at the sentiment, you know that this is what people feel. But this is actually the math that is telling us the same thing, that people are fearful and excited. It's can be quite similar if you think about it, but people are not certain that this is where we should be.
Okay, now if I'm looking at this, or if you're looking at this, what are you calling? Are you calling Bitcoin to shoot through the roof? Are you calling for a pullback? Are there any signs looking at this CVX indicator?
Well, first of all, the big thing is that it means change, right? And if you're and rapid change. So as a trader, if you just feel that this is going to move quite a lot, the Bitcoin price is going to move quite a lot in the coming days, you don't really care if downwards or upwards. You can buy the VIX and just enjoy the upside, right? Because you don't care about direction. You just care about, is it going to be volatile or is it not going to be volatile? Is this going to be stagnated and boring or volatile, right? Our analysis, by the way, and I don't want to spoil the party, but our analysis said that Bitcoin will withdraw a bit in the coming days, but it's just an idea. We're not sure, of course, but what I am sure is that it's going to be volatile. So the changes will be big in the foreseeable future.
All right. Well, just before we cross over to a break, I want to just remind our viewers that if you are watching this and you want more of this contract, hit subscribe, like our stream. If you like our stream and hit subscribe, more viewers get to hear about it. And then we get the momentum and we get people calling in. If you want to call into our show, it's very, very, very simple. You can go to cryptobanter.com, which is our website. On the cryptobanter.com website, you'll find 3 ways to contact us, or 4 ways to contact us. One is you can call us on 1-646-809-5898. You can Telegram call us on Telegram at cryptobanter. And of course, you can WhatsApp us at 1-646-732-4269. And if none of those work for you, if you want to remain anonymous, you can go to our website. There's a widget on the website which allows you to call into the studio directly and remain anonymous. At the same time, our producers are going to drop a StreamYard link into the chat right now. You can click on that StreamYard link and you'll be patched in directly to the studio. So many ways to call in. Remember, this is the station where you call in, you make the news, you break the news, and you bring the banter. Now, speaking of banter, joining us today on the show is Winston Wolf. You may recall Winston Wolf did a DeFi segment for us earlier this week. Winston, you've been watching this show all the way from Australia, mate. What do you think of the CVEX index?
I love it. I think that in times like this, having an instrument that allows you to trade on volatility can only be helpful. I mean, like, the market goes up, and a lot of the time it comes back down, right? So these are prime times to trade such an instrument.
So, Winston, when you look at this CVEX index and you look at it at 1990, which is nearing 100 and nearing the middle of its upper or lower range, what are you calling? Are you calling the market up, down? What is a trade like you actually doing in a market like this?
Well, I mean, I'm pretty bullish at the moment, but this makes me a little bit scared. But having said that, I mean, like, I think the idea of having an instrument like this out there is, if I am bullish on the market and have positions in BTC or ETH or something like that, I can hedge against those using something like this. And if the market goes down, I can kind of lessen my losses as a result.
Okay. When you see the volatility spiking, like it has clearly spiked between the 16th of November and where we are today, what is a trader like you doing? Are you exiting altcoins into Bitcoin? Are you going more into altcoins? Tell us, get us inside the mind of the trader.
Well, unlike a lot of the traders that you've had on the last few days, I'm not scared of altcoins. It seems like you've got a lot of basic BTC bitches coming on the show who just sit there and do basic TA and don't really trade the momentum of the market or the sentiment of the market. And there's been a lot of action on altcoins. I mean, like, everyone's aping into XRP of all things at the moment, which has proved to be like a 3 times trade over the last week or two.
I mean, would you buy? Would you have the guts to ape into XRP?
Not right now, but yeah, even a couple of days ago, I mean, like, it went up like 50% overnight, kind of thing. So, like, there's huge amount of opportunity there, and if you're taking small, like, leverage bets on things, there's money to be made. So these guys are sitting there, like, grinding out little bits of BTC here and there and suffering the same sort of risk as pretty much anything else. Whereas, like, there's alts popping off all around the place.
All right, we got another caller coming in. His name is Michael. Michael, welcome to our show. Where are you calling from, man?
Hey, gosh, I'm calling in from the Netherlands. I'm a big fan of Winston here. He told me there's a Uniswap airdrop in this chat, so I joined because he said he was going to airdrop me $20.
No worries, man. I'll buy you dinner. I'll buy you a steak.
I'm in the wrong call. Oh, shit.
All right, Michael, are you trading this market at the moment?
Yeah, I guess, right? It's not worth calling trading, right? Like, some people call it trading. I call it aping, like most people do. So you just push way too much money of your net worth into one single farm and hope you don't get rug pulled. But yeah, I guess I am in the market right now.
Okay, now, when you talk about farming now, when I look at the altcoins and the runs that are happening in the altcoins, and then I look at farming, it doesn't seem like it makes much sense to farm when you can get such amazing returns on altcoins straight, as opposed to, chasing yield. We saw Pickle got hacked the other day. I mean, does it make sense to be giving your money to farms, or should you be trading altcoins? Winston, what do you think?
Well, yeah, I think that's a really good point. In fact, Michael and I were just discussing that earlier this evening. There's actually a farm that we've aped into tonight, Benchmark, which is actually like pegged to the actual real world VIX. It's a rebasing coin that just goes up and down. But what we're doing is farm and dump. Like, this isn't something that we're going to hold on to. It's probably not even a good project. But, over the next 12 to 24 hours, it's got a pool 1 and pool 2, which requires the token that's being farmed, which means people will go out and buy that token, push the price of it up, and allow us to sell into them.
Okay, so if our viewers want to go out and ape into Benchmark, as you call it, where do they go? What's the Benchmark address?
It's benchmarkprotocol.finance.
Shach, are you into this DeFi yield farming?
No, actually, I'm not. We consider ourselves more of builders than traders, or farmers. Obviously, I've played quite a lot with everything, but I don't consider myself a trader. But looking at all of this and connecting this to civics, so I think one hell of a strategy can be testing a few things, alts, Bitcoin, whatever, but just buying some volatility. In case everything goes wrong and everything goes volatile and against you, you're hedged. So I think that's the idea behind the volatility index.
And how can we buy the CVIX? If we want to start buying the volatility, like we buy the VIX, how can I buy it? Where is it listed? Can I buy it on Binance? Can I buy it on any of the exchanges?
It's a DeFi protocol, so you buy directly by connecting a wallet. But don't run to it right now because the trading platform will only be live in a few weeks. You can just start out with ETH and USDT, and we're going to add more tokens to it afterwards. But you just connect, buy. You don't need a centralized exchange at all to buy it. And when you buy it, you will get a CIVIX token, which is essentially farming. So while we don't farm, we do create the land.
Okay, Shachaf, before we let you go, I've got a few more questions for you. If I'm holding COTI tokens today, can I stake them anywhere and can I get yield on those tokens?
Oh, yeah. We have one of the most performing staking programs out there. And you can do that directly with us. Sometimes we open it to exchanges as well. We did it with Binance and KuCoin. But you can do it with us, and then you take part of processing transactions with us, and you make a great return. Usually it's about 30% a year, even more in some cases.
And what's the web address where people can go if they want to stake their COTI tokens?
You should just go to our group and just ask it there, like billions of people before you, and people will direct you. Our website is at coti.io, but the group is usually a better place to start off everything.
Great. Shachaf, it's been a great pleasure to see you again, my friend. We look forward to it. If our viewers want to claim their CVX tokens, when are the windows? When is the next claim window that our viewers can use to claim the CVX tokens?
So we have a CVX channel and CVX website, so cvx.finance, and the channel is CVX on Telegram, and we announce everything there. And there is another claim coming soon, and you can get CVX at no cost.
Now, Shachaf, I'm watching the chat, and there's COTI must have a very powerful community. There's guys here commenting that they've got COTI tattoos all over themselves. You've got a big following base. There's actually a guy here who says he's going to get a tattoo of you on his arm. So, I mean, I don't know how I feel about that. Don't know how you feel about that.
Why not? I think everybody should do it.
Shachaf, great pleasure hosting you, my friend. Be well. Good luck at COTI, and keep us updated of whatever's going on. Winston, I'm coming back to you. So now, if you've got money, should you be putting money into yield farms or should you be putting money into altcoins? What do you think is the better bet?
Oh, look, I think if it was a one or the other, it's definitely altcoins. Having said that, like with any sort of strategy that you have in this sort of market, diversification is key. So have a little nibble, but I definitely have more of my money in altcoins than yield farms.
Okay, what are the favorite altcoins that we're getting into? Because we're not going to be aping into XRP. We're certainly not getting into Ethereum at $600. What are we buying today? What are the gems, the ones that haven't climbed yet?
Well, a lot of alts have already climbed, but I do have a little list here of things that I'm looking at. Obviously, you were just talking to Shahaf. I hear that there's going to be some interesting news for COTI coming over the next week or two. So that's something I'm focused on. RSR, reserve rights. Again, I hear there's going to be good news coming on that. So definitely something to look at. You've spoken a lot about like projects getting hacked. So, like insurance protocols are starting to come out at this point in time. Ensure is one that is kind of like an NXM competitor, but at a much lower market cap. And it's been performing pretty well. Frontier, which is a DeFi-based wallet, which actually allows you, it's like a DeFi Swiss Army knife that allows you to access pretty much all the protocols from within the app. They've got a really good token, which is performing quite well. And when it does come to yield farming sort of stuff, APY and easier too that I've got my eyes on.
And are those tokens that you're trading, or are those yield farms that you're looking at? In other words, are you staking there for yield, or are you actually buying the tokens?
I'm doing both, to be honest. Like, obviously, the first ones that I mentioned are just straight buys. Easy and APY. APY you can farm at the moment. Easy you can't farm, but you can buy that and use it to farm Matic. So I think that one of the things that you want to look for with any of these sort of tokens is that when the token's required for people to go out, use it and farm something else, it's actually a really good buy, because obviously that increases the demand, which, in theory increases the price.
No, I don't know if you saw my pickle trade from earlier this week. So I went long into
I heard
pickle.
you got murdered, sir.
I got murdered, but if you look at what's happening today, it looks like Andre Cronje published a piece on Medium which said that Yearn Finance and Pickle were going to start to collaborate, and that sent the Pickle price almost up to $30, although it has come back down to about $17.50 now during the show. I don't know if have you been watching that one?
I certainly have. I mean, Andre seems to be the new McAfee of 2017. So when he tweets, it pumps, and you just need to be careful of, as you saw on the savage sell-off after the pump.
Amazing. Winston, we've got some callers who are here to speak to you. I'm going to bring in Michael. I'm going to bring in Nikki. Sorry, Nikki, welcome to our show. Where are you calling from? Nikki, welcome to our show. Where are you calling from? Okay, he disconnected. All righty, Winston, we're going to let you go. We're going to bring in Big Cheds. Now, for those of you who've been following me and my show, you would remember that many years ago, we brought Cheds onto our show. And back then, Cheds had cancer. Cheds, how are you? Have you recovered? Are you in remission?
I'm doing great. Thank you. Thanks for having me. Yes, you invited me. I think it was just over 2 years ago, 2.5 years ago. It was an honor. I am in remission. I'm about 2.5 years cancer free. I'm doing great. So thank you for asking about that.
So you're doing great and you're trading the market. Tell us what you're trading on the markets.
Oh my God, I'm trading everything. Last night was one of those nights where it was impossible to sleep because, Bitcoin, big moves in Bitcoin, altcoins were going nuts. Ripple XRP was going nuts. I've been doing like leverage trading on the hot alts, so like Link, XRP, TRX, and I've been doing quick moves, kind of based on corrective moves and stuff like that. So I've just been having fun trading alts. I've been buying Bitcoin on the dip, and getting ready for the big show today, maybe 20K. What do you think?
I'm convinced that we're getting the all-time high today. Church, let's get a little bit more specific. What are we buying today? And in fact, before we do that, I just want to remind our viewers of two things. Number one, if you're watching this and you like this content, hit the subscribe button now. Press the like button now. Remember, the more likes we get, the more subscribers we get, the more the YouTube algorithm helps us reach fellow crypto users. Also, if you want to join the show, call in now. Call in, join the conversation. We've dropped this link, the call-in StreamYard link on Twitter, on our Twitter, which is at crypto_banter. You can also call in live either on WhatsApp by dialing 1-646-732-4269. You can get us on Telegram at cryptobanter, or you can call in on 1-646-809-5898. Call in, speak to Cheds, challenge him, ask him what he's trading. Cheds, I'm coming back to you. What are you trading specifically?
I think there's been an interesting ebb and flow. I think right now it's Bitcoin, and when Bitcoin starts to cool off, it's going to be alt. So we've seen this kind of dance where people have been anticipating that like macro high for Bitcoin. They've been going into alts, but as soon as Bitcoin rallies, money's flowing back from alts into Bitcoin. I think it's Bitcoin through the 20K high. I think we probably top off a little bit at maybe 20.5K. That's when I think we're going to see massive inflows into Litecoin and Ethereum. I heard you talking about Ethereum in the last segment. I think we actually see 800 Ethereum. I think we're going to see Ethereum.
But when do we see 800 Ethereum? Do we see a pullback first to 500, or do you want to share? Do you want to share some charts and show us what you're looking at?
Yeah, sure. Through this program, let's see. Share screen. Let's take a little peek over here.
Winston, he's sharing,
just while that's happening, I just want to point out that we're under 2% from Bitcoin's all-time high at the moment. We're getting close.
Interestingly, that means that every single person that's ever bought Bitcoin and held Bitcoin has made money. I mean, there are very few assets in the world that can say that.
Well, let's hope they keep holding for now. They can dump later on.
Yeah. Ched, Winston, are you expecting a pullback before we hit higher levels on Ethereum?
Look, I think we see 700 before we see 500.
Yeah.
I mean, you know, like I saw one of the guys on the show yesterday saying that BTC was a better trade and blah, blah, blah. And then, you know, Vitalik came out and it's like, man, ETH 2.0, the contract's almost full, you know, like pumped it. There's just so much going on with Ethereum past ETH 2.0, obviously. It's powering the DeFi ecosystem. There's just a lot of utility there. And I just see a huge amount of demand for it around the place. So I'm way more bullish on Ethereum than I am on Bitcoin.
Oh, well, let's get to the charts. Cheds, let's look at the chart that you're looking at. Tell us what you're looking at here.
So I'll just start out with Bitcoin. I think what I talked about with this kind of flow between Bitcoin and alts, and we've noticed Bitcoin has just used this 8-period exponential moving average as support really all the way up. And we're really close to doubling, you know, now in just a month or two in a short period of time. So really when Bitcoin has kind of become short-term overextended on these moves above the upper Bollinger Band, we've seen these little alt runs, right? But Bitcoin has continued to churn higher. And really, since we broke that macro lower high, the 14K, you know, from the 20K push, it's felt like it's been inevitable. We're going to hit 20K, and we're kind of almost there. You know, my point with Ethereum and Litecoin, if you remember, after Bitcoin topped off last time, that's when Litecoin had its run, right? That's when Ethereum had its run. So you're going to see, I think we're going to see some type of a bull trap set up on the 20K break, because I'm kind of thinking about Bitcoin. Let's move the Bollinger Bands. I'm kind of thinking about Bitcoin perhaps as doing like a cup and handle continuation type of move on the daily charts. We go back, we get up to 20K, we come back, create that handle, maybe we drop to 14, 15K. While that's happening, if we have that type of a corrective move, that's going to set up the right type of environment for Ethereum to test these May, June highs of 800. So that's kind of what I'm thinking about.
Okay, so we have some callers calling in to speak to you guys. I'm going to bring in Joe. Joe's a big fan of the show. I know he's been watching us. Joe, welcome to the show. What do you want to ask our caller? What do you want to ask our guests?
I don't know. I don't necessarily want to ask anything. I kind of just wanted to join in on the show. You know, I've been watching. Wolf is a good old friend of mine, and we see eye to eye quite a lot of times. So it's good to be here.
It's good to have another Ethereum.
Yes, Ethereum mostly-list. Ethereum mostly-list, not maximalist. Never maximalist.
Joe, are you trading this? And if you are trading, what are you trading in all this?
I'd say mostly been just trading Ethereum. I like altcoins, but I think that I like also safe bets, not risky bets. So I'd say 80% of my portfolio right now is in Ethereum. I have a small amount of Bitcoin. I do believe that Bitcoin is obviously going to reach new highs. I mean, it's a given. Bitcoin is Bitcoin. But if we're looking for short to midterm upside, I think that Ethereum is a much safer bet. And we've seen that, like, considering when you had Tone on your show the other day and he was saying, no, don't care about Ethereum. We've seen a considerable amount of upside on Ethereum since that show, actually, which was quite funny. And I wanted to join that show, but unfortunately I didn't manage to. So.
Well, Joe, well done. Thanks for making this show. Remember, if you're out there and you are enjoying the show, click the like button now. Hit the subscribe button now. We are growing in likes. We are growing in subscribers. And that means that more crypto people are getting this energy. If you want to join the show, go to www.cryptobanter.com. There you'll find a whole lot of links, which will link you back to the show. We've got another caller coming in. His name is Big Conus. Big Conus, welcome to our show.
Hey, thanks so much for having me. Really appreciate it. Excellent show today.
Are you trading this? Are you trading today? Are you trading this bull run?
Listen, this is an incredible run. I was with Cheds 3-4 years ago when we were watching Bitcoin accelerate towards the $20,000 zone. I can't believe we are here once again, and we've lived through so many years of false moves, false breakouts, epic dumps, only to get back here like it never really happened. And what's really exciting now is I think for the first time, we're seeing a real understanding and acceptance of this crypto market from the masses across the board in a way where it was felt like it was more of a one-time deal, kind of FOMO, unusual thing back in 2017, 2018. Now the maturity of the market is so in this new paradigm here, where it's like, okay, maybe these aren't as unreliable or uninvestable as they were once thought, and the numbers can prove that with some epic moves across the board. The number one chart. Sorry, go ahead.
It does feel different. It does feel different this time. It feels much more real. I remember in 2017 when we were at these levels, it felt very fragile. There was no adoption. There was no banks. There was no PayPal. There was no custodians. It feels different this time around. And it feels very different this time around. In fact, this time it feels very, very real. And that's why, to me, it feels like $20,000 is maybe just the beginning. Cheds, I want to ask you, on your charts, does it feel like 20,000 is just the beginning, or are we going to go like 20, 21 and then pull all the way back?
Let's go ahead and let's just take another peek at that. I'm glad you asked. And once again, everybody hit that like button and the thumbs up. So Bitcoin, I think if we want to think about where it's going, I was showing you the cup and handle. You can definitely make an argument, and I'll draw this very quickly just for the sake of time, for some type of a monthly or a weekly bull pennant. And if you do that, I think we're actually looking, and they have the breakout here, and you have the throwback, which is a bullish retest. I'm looking at 27 to 30K Rand. I think that's after we consolidate a little bit here. I think I'm really leaning towards that cup and handle type scenario that's going to take us up to like 27 to 30K. You know, that's on that larger time frame. I think we do need a shakeout and a consolidation. I think you talked about fragility. I think we'll see a return to fragility on the 20K break because so many people have been waiting for it. And then we'll pull back. We'll hit logical support. Every dip is going to be bought. People are accumulating. There's more and more adoption. I think we get a little more shakeout, a pullback, a really healthy pullback. We build that base, and then we just shoot all the way up. So I think we're going to see, 27 to 30K really, and not that far future.
What's driving this a lot is corporate treasuries and real corporates actually buying Bitcoin today. And, with a very limited supply, and I mean, everyone talks about the 21 million coins, but it's not actually 21 million, because we know that a lot of coins are lost. We know that a couple of million coins are lost. We know there's Satoshi's coins. And I really think that we're heading to a point where there's a shortage. A lot of the coins are wrapped up in DeFi protocols. You've got these corporate treasuries buying coins. And I think the scarcity is now kicking in. Gentlemen, before I let you go, I've got a big question for you guys. $10,000 to invest today. You can invest in one coin and one coin only. Are you investing in Bitcoin, or are you investing in ETH? Your time horizon, let's be clear, your time horizon is the next 3 months.
Next 3 months, I'd probably go Ethereum.
Winston.
Ethereum for me, hands down.
Bitcoiners.
Bitcoin, but I don't believe it will hit much more past 21,000. I think that's the lid. And I think we're going to be hovering in this range for months. I think 25 above is a pipe dream.
Okay, and Ethereum, what do you think the upper range is for Ethereum? I think Ethereum hasn't even started yet.
The thing about Ethereum, and yes, it's a huge part of it where it has to get locked up in the staking of a lot of these DeFi and, of course, the ETH 2.0. It is still an S coin, and you have to kind of keep that in mind, as well as the fact that the supply of Ethereum is significantly larger and can continue to expand as time goes on. It's not as capped like the way Bitcoin is.
Okay, now I'm gonna ask you guys a question. It's an unpopular opinion question, but do you think at the end of the day, Bitcoin or Ethereum is bigger? And I say the end of the day, 20 years from now, what's got a bigger market cap, Bitcoin or Ethereum?
It's easy, right? It's Bitcoin.
Winston?
It depends where we take this decentralized finance sort of thing. I think the finance 2.0 is being built on ETH. It's not being built on BTC.
So this is if you look at BTC has positioned itself very firmly as a store of value digital gold. It's not a payments mechanism. No one's using Bitcoin to pay for their coffee, but a lot of people are using Bitcoin to hedge themselves against dollar printing, etc., etc. Today, that's an $11 trillion market if you look at gold. How big is the digital internet? How big is every single finance transaction built onto one decentralized protocol? If you trade DeFi today, you'll know that the gas fees today to perform one transaction could cost you 30, 40, 50 bucks in gas. Now, if you take that and you grow the entire financial system onto a decentralized protocol, that to me sounds like it could be bigger than digital gold. Winston, is that your thesis?
That's pretty much totally my opinion. Yeah. Like I'm not anti-Bitcoin. Like, let's just get that out there. I do like it. I do think there's a lot of value in it still, but it's more value and less utility. Bitcoiners,
what do you think? Bitcoin or Ethereum?
Well, it's a very good point about how Ethereum could be the building blocks of the DeFi revolution. So that is definitely a thing out there, as well as the all-time high for Ethereum around $1,200, $1,300, $1,400. We're only at the 382 kind of that advance. The 618 retrace back up the mountain is almost $900 Ethereum. So there's running room before the golden pocket resistance can be reached, and I expect there to be significant resistance in that area. Remember, this year Ethereum was $80, and now we're over $600. That is an epic move with a couple retracements and a couple pullbacks, but still the strength of this market. Every Bitcoin parabolic move has had a 70 to 80% pullback. Keep that in mind as we continue to range higher.
I do think there's a little bit of difference there in regards to I was just reading a statistic the other day. It seems like PayPal's buying 70% of all the new coins in the market. We don't have like the full degen style BitMax in operation. Like the environment's changed a little bit from like the last time around, you know. I think, and if you look at the 2020 chart there for Bitcoin, apart from, you know, obviously the March crash, it's been a sort of a slow, steady march up. We haven't had the savage pullbacks, and it doesn't seem like we will at the moment. Like a savage pullback at the moment feels like 7 or 10%, not 40%.
You want to see a savage pullback? I want to show you a chart. This is what I call a savage pullback, but this chart isn't actually what you think. This is the BTC Dominance Index, and if you see, the BTC Dominance Index over the last couple of days has gone from 67.5% all the way down to nearly 60%, which means that it's full-blown alt season out there.
Here's the difference. Well, here's the difference. If you remember in 2017, 2018, there were two alt seasons. There was an alt season before Bitcoin hit its all-time highs, and then as soon as Bitcoin did hit 20K and started to pull back, that's when that tremendous alt season with Litecoin, Ripple, XLM, that's when those really exploded. So the real alt season didn't necessarily start until Bitcoin topped off.
There are two charts that scare me. I mean, this one tells me that we're in full-blown alt season. This is the chart that scares me the most because people are aping back into XRP. I mean, how do you guys feel about that?
It's the standard, right?
I think that's based off the snapshot that's happening in December. Obviously, there's a little bit of TikTok shilling going on too, which is an interesting thing that we didn't have in 2017. I mean, again, the market's changed in like a COVID-style world where everyone seems to have Robinhood and is trading stocks, and at the same time, they're pumping Dogecoin, pumping XRP now on TikTok. You know, like these 17-year-olds are entering the market. This is the retail traffic that we wanted. We just didn't think it would be kids.
Alrighty, before I let you guys go, and I've got a very big guest coming up ahead. He's ex-presidential candidate or previous presidential candidate, Brock Pierce, long-time crypto enthusiast, and in fact, one of the people that's got more people into crypto than anyone that I've ever met. Before I let everybody go, just a reminder to our viewers, subscribe, hit that like button, hit that subscribe button. It helps us get new viewers to watch the show because that's how the YouTube algorithm works. And then again, remember, this is a call-in show. And if you want to call into our show, go to www.cryptobanter.com. It's where you call in, you can join the show, you can join the conversation. We've got a whole lot of different call-in options. Gentlemen, before I let you go, one by one, Bitcoiners, Cheds, and Winston Wolf, I want your top 3 altcoins. And what I mean by top 3 is the altcoins that are going to trade the highest in the next 30 days. I'm looking for big price moves in the next 30 days. 3 coins. Where are you putting your chips? Winston.
I'm doing Cody, I'm doing RSR, and I'm probably doing Woo.
Wow. Okay. Cheds.
I'm kind of boring. I'd probably say Ethereum, Litecoin, and Link.
Wow. Are you part of the Link Marines?
I'm part of any squad that can make me money, my friend.
Alrighty. And over to you, Bitcoiners. Top 3 coins, 30-day holding period. We're going to call you back in 30 days. We're going to hold you to these calls. What are your top 3 coins?
Link, Litecoin, Uni.
Uni being Uniswap?
Uni, the one that's at $4, not the one that's at $28,000.
Gentlemen, thank you so much. It's been a great pleasure hosting you. We're going to be crossing over after the break to Brock Pierce, ex-presidential candidate and longtime crypto enthusiast. Gentlemen, thank you so much for coming on Crypto Trader. And just a reminder to our viewers, if you are watching this, hit the subscribe button, hit the like button, or you can call us on any one of these numbers. Call us now. Join the conversation. Let's have some fun out there. We're going to cross over for a short studio break. And
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
Mr. Brock Pierce, welcome to our show.
Thank you for having me. Glad to be here.
Brock, where do we find you today?
I'm in San Juan, Puerto Rico.
I'm getting a terrible echo on my side, so I'm just trying to sort out the echo on my side. I'll be one. How's that? Oh, there we go. The echo's gone. Oh no, the echo's not gone. Hold on a sec.
I'm reducing my volume just in case that's creating a feedback loop. Is that better?
Let's test 1 2 1 2. Yeah, that is.
Test. Bitcoins. Bitcoin 1 2.
Bitcoin 1 2. Bitcoin 1 2. All right, Brock, where have we found you?
I'm in Puerto Rico. I'm back at home, and that presidential run is not technically over yet.
Do you also believe that, or do you think Trump's in? I mean, do you think there's any chance that Trump's not in?
That Trump's not in?
Well,
I mean, as of right now, yeah. Well, the Trump administration has now allowed the Biden transition team in. That's obviously a huge step in, I wouldn't call it the concession or the conceding, but demonstrating that he is acting in the best interest of the country right now. And I know that was a concern raised by many. He's allowing the transition team in, but he looks like is going to continue to contest this election to the best of his ability all the way. And the odds of that succeeding is diminishing rapidly, though there is a chance if he succeeds, no one will get the 270 electoral college votes necessary to win. And if that were to happen, then it would go to the 12th Amendment, and the House of Representatives would choose the president from the top 3 candidates based upon the number of electors they have.
Brock, do you think it was a fair election?
Well, do I believe anything is fair? The answer is no. The stakes are higher than ever. 70% of Americans are questioning the integrity of our electoral process. And there's no doubt the stakes were high. This was a blood sport. It was vicious. And I have no doubt that there was cheating. The question is, was it organized in a way that some are alleging? And I don't have an opinion that I'm clear on. I know that I value my right to vote. I value my right to run, and it's imperative as Americans that we exercise that right. We have the power to choose our government. We have the power to choose those that govern over us. So let's choose wisely. Let's vote our conscience. Let's not make fear-based decisions and vote out of fear. Let's vote for whatever it is that we believe in.
Now, we have some viewers on the Telegram that are saying that the crypto move is related to the uncertainty in the presidential election. What do you think about that?
Well, I think it definitely plays a role. I think what's happening with crypto right now, much in the same way as is happening with commodities like gold, and what we're seeing in the equity markets right now, is a lack of confidence in the, call it, underlying financial system. As much as 26% of all US dollars ever created were created this year. That is a frightening figure. And what that's doing is people are running away from, U.S. treasuries and U.S.-based bonds, and they're running into the equity markets, and they're running into alternative investments, alternative asset classes. And Bitcoin and cryptocurrencies are clearly probably the biggest beneficiary of that move.
And do you think that this bull market feels like the 2017 market?
I mean, it does in many ways, in the sense that we're seeing a bull market, prices up and to the right and pretty in a major way. I think this market, though, is very different. As you said in the previous segment, the market is maturing. It feels much more real. You now have a majority of every major financial institution in the world has validated this technology, whether they're playing with blockchain and distributed ledger, sort of databases, or whether it be cryptocurrencies. You're also seeing governments all over the world testing this. You even have some governments buying Bitcoin to have on their balance sheet. You see major family offices buying as a way to hedge against any financial uncertainty in the market. This time it's much more real. The herd has been culled. Those projects that were running on all hype, out there raising money through ICO paper, those projects that have worked their way through the trenches are still turning out product, and a handful of those projects are left. Many of the weak projects that didn't have the skills necessary to execute are gone. And I'd say the market is much more real this go around. I'm much more confident in hodling now than I was in 2017.
Bitcoin or Ethereum?
I'm more bullish on Bitcoin long term because I think its role in the market is, I think it's got a stronger foundation. I continue to be a big believer in Ethereum and what it's done for the ecosystem. Clearly, the idea of decentralized finance is now real. It's not just an idea. We're seeing it with DeFi. I think that Ethereum in the short term with Ethereum 2.0 is probably a better bet in the next 90 days, as was said in the previous segment. But Ethereum's long-term role in the market is not as certain as it is with something like Bitcoin. There are still other blockchains that are producing infrastructure that could power decentralized finance, and we're really going to know post Ethereum 2.0. Does that Ethereum 2.0 upgrade go smoothly? It's very hard to change your engines mid-flight, and a lot of the applications that were developed for Ethereum 1.0 are going to have to go through substantial redevelopment to function on Ethereum 2.0. But in the short term, I think Ethereum is a good bet.
Alrighty, so we have another caller. His name is Mr. Neil. Mr. Neil, welcome to our show. What do you want to ask Brock or myself?
Hi, Red. Thanks for having me on the show. Enjoying the show. Brock, how are you doing?
Grateful.
I think we got feedback there again.
Yeah, it seems like the feedback's coming from Brock's side. Brock, I think the feedback's coming from Brock's side. If you do have something on, maybe just switch it off there.
Hopefully this is better.
All right, Neil, you wanted to ask Brock a question?
Perfect. Yeah, Brock. So I've been an investor, sort of a passive investor as a latecomer since 2017. I've got two questions for you. The one is in line, obviously, with what you're saying about what's happening around the election. But from my amateur watching of the market, it seems like people flock to Bitcoin like gold during political instability. Is that a true assessment, or is it more complicated?
Yeah, I think that Bitcoin is best described as digital gold or gold 2.0. It is really only being used as a store of value. There are decentralized sort of yield-generating lending opportunities there, but as a technology platform for payments and otherwise, Bitcoin is definitely not demonstrating that it is likely to lead in that department. But yeah, definitely, it's more like a store of value. It's definitely more like gold 2.0.
Okay, fantastic.
If Bitcoin is,
another question was around, obviously, the big drop in 2017 towards the end of the year. Is it something we can expect again, or has the market evolved and stabilized a lot more over the last couple of years, where something like a crash towards the end of the year is not to be expected or to be duplicated?
Well, I think that we're going to continue to see these cycles where it goes up and it comes back down. But as we go through each one of these cycles, we find a higher floor and we reach and break through new ceilings. So I would anticipate whenever this bull run concludes that we're going to see some sort of correction, but that correction is going to find us higher than we were previously. And so buckle your seatbelt. It will continue to be a roller coaster ride now and in the foreseeable future.
Brock, what about altcoins? Should we expect a fully fledged altcoin run like 2017, or do you think people have learned their lesson after what happened in 2017?
I think that we'll probably see an altcoin run again, and people will have learned their lessons. They will be buying less vaporware, and they will be buying into projects that now have at least a couple of years of execution under their belt. But I think that we'll see it across the board. The best projects will be beneficiaries this time, and a lot less vaporware. And just a warning to everyone, altcoins obviously are far more volatile, and the likelihood of them performing over the long run is much less likely. So don't trade out of all of your Bitcoin and Ethereum into alts. If you do so, try to play with a manageable bucket to try and find that extra yield.
Now, Brock, we saw the gold price go down today. It's had a shocking 3 days. Gold's gone from about 1885, and today I think it went under 1800 for the first time in a long time. At the same time, we've seen Bitcoin decoupling from gold, and Bitcoin keeps going up. Do you think we're being over ambitious when we say that money is flowing out of gold and into Bitcoin?
I'm not sure there's a direct correlation, and I think that's a good thing. Historically, the Bitcoin correlation to other asset classes has been there, and what we really want as investors is a non-correlated asset class, which has always been the dream of Bitcoin and cryptocurrencies. So I think that is a very positive thing that we're seeing that disconnection from the other asset classes. For Bitcoin to really moon, for us to really find that bull market that we all dream of one day, that has to happen. And so hopefully this is the beginning of that.
Amazing. We've got another caller calling in to speak to you. Luke, you're calling in to speak to Brock. Welcome to our show, Luke. I see we got Luke. Luke's muted. Luke, are you on?
Can you hear me now?
Here we go. Luke, are you back on? Yeah, I can hear you. How you doing,
Okay,
Luke?
awesome. How you guys doing?
Good. Where do we find you?
At Hacker on Instagram.
Amazing. Okay, Luke, tell us what you're calling about.
So I just wanted you guys' opinion on like what you guys think will happen after we break $20,000 Bitcoin, and also your thoughts on ByBIT.
The ByBIT army. I'm going to answer that before Brock answers that. My thoughts on Bitcoin are that we continue to go up and to the right. Whether or not we're going to have pullbacks, I don't know. But if you're going to buy and hodl, then just keep holding your Bitcoin. Keep buying Bitcoin.
Definitely. So
I buy Bitcoin every day.
Yeah, no, me too. Yeah, I'm definitely like fine. I put my entire net worth in it a few months ago, so I'm all in. Definitely all in. Yeah, I know it's a little extreme. It's definitely not recommended, but since I'm only 20 years old, it's kind of more advantageous, for the long-term perspective. So after we break 20K, do you guys think we're going to go to 30,000, 25,000, or do you think we're going to see retracement back to 50,000? Because Brock, obviously,
Brock, I know you don't speculate on price, but what do you think of a 20-year-old that's put his entire wealth into Bitcoin?
Well, if you're going to do it, that is the time to do it. So we often look at entrepreneurs, and we tend to think that young people are more successful as entrepreneurs than those that have a little bit more, call it, years. The reason for that is not because young people are actually better at building startups. It's that young people can afford to take greater risk. You don't have kids, you don't have a mortgage. And so if ever you're going to take outsized risk, it's good to do it when you're young and you can afford to take those risks. And so I wouldn't advise anyone to put everything they have into Bitcoin, but if you're going to do it, when you're young is the right that move. because you can afford to pick yourself up and start over again if necessary.
Yep, and that's
No,
exactly.
I don't think that will be necessary.
Now, Luke asked whether you think Bitcoin's going to 25,000 or 30,000. I think that you think that Bitcoin is going way higher than that. Love to hear your views.
I mean, the answer is yes. I believe that Bitcoin is going much higher than that. The question is not so much if, but when. We're in a bull market. This is those moments where, we don't know where the ceiling is. I think we're going to pass 21,000. We might pass 25,000. We might even hit 33,000. But I think that we'll find a ceiling, and then the market will come back down from wherever that is, and we'll be there for however long it is. And I think that will be determined by external events more than internal events. It's really going to depend on what happens within the global financial system. What's happening with money printing right now is frightening, and that improves the odds of us seeing a higher price for Bitcoin sooner rather than later. Long term, I'm incredibly bullish. Short term, I don't pretend to be the expert.
Yep, no, me too. And also, I was just going to say, I also own the Snapchat username Bitcoin, so I feel like that could potentially be worth money in retrospect to the actual thing. Because my Instagram's Hacker, and then my Snapchat's Bitcoin. So I feel like holding on to that. I've had companies like Lolly already approach me. The Roger, who owns Bitcoin.com, approached me. So I feel like holding assets that are related to Bitcoin that are not directly investing in the currency is another smart way to get involved in the industry without actually just buying the coin and hodling.
So Luke, I love you, man. You're the epitome of a risk taker. I think you're the epitome of entrepreneur buying or getting the Bitcoin Snapchat name. I got a great idea for you. Why don't we auction off the Snapchat Bitcoin name right here on our show one day?
I've been holding on to it for so long. I've had so many company interests and stuff, so I would definitely want a pretty fat paycheck at the end of the day for that, But
and I think you might actually get it. Luke, the lines are going crazy. I see a lot of people are trying to phone in and speak to Brock. We're going to let you go. Thanks for calling in. And just a reminder to anyone that's watching, if you are watching, like and subscribe now, because when you like and subscribe, it plays the YouTube algorithm, and it brings this content to other viewers and other listeners like yourselves. And then again, this is a call-in show, and if you do want to call in, if you do want to speak to Brock, you can call us on any one of the numbers displayed on the screen. You can WhatsApp us, you can Telegram us at Crypto Banter, or you can call us on the US number that we have on the screen. Brock, before I let you go, we've got a whole lot of callers that are calling in. I'm going to add in someone who calls himself Pizza 12. Pizza 12, you're live on air with Brock Pierce.
Oh, wow. Can you hear me?
Yes, we can. You're live on air.
Oh, damn. All right. I have to tell you, Brock Pierce, I'm like a huge fan of you. I've been following you. Like, I really understood Bitcoin because listening to one of your podcasts 3 or 4 years ago. And I plan to start a DAO agri-farming business in the Philippines, which is a country I really like. I've been to twice. I'm from Canada. And I was just wondering, what are the countries that you think that are the most likely to have the highest adoption rate of cryptocurrencies in the near future?
So I've been saying since, I think, 2013, 2014, that this technology's greatest potential is in the developing world. It's in Latin America. It's in Africa. It's in Southeast Asia. It's in places where financial inclusion is necessary, where the infrastructure isn't there, in the same way that Africa has leapfrogged wired communications and gone straight to wireless. I think that this technology stands to benefit. Actually, the Philippines, I think, is one of the greatest places in the world. You've got 100 million people that speak English. Everybody's got one or more devices. They were the earliest adopters of social networking. I think that the Philippines is one of those great potential markets for this technology. Clearly, places like Venezuela, where you've got problems with the central currency, places like Africa, which Rand can talk to probably even better than myself. I think long term, that's where we'll see the real sort of consumer end user adoption. Those of us in the developed world are more speculators. The impact it's going to have on our life is material, but not so much so that we're going to see, large percentages of the population adopting this technology over a very short period of time.
Brock, do you think we're going to see another stimulus package from the US? I mean, there's been a lot of up and down. There's been a lot of news around vaccines. Do you think we're going to see another stimulus package? And because that could be a good catalyst for another Bitcoin run.
we're going back into major lockdowns in the United States, like the first one or the second one worked. But we're going back into that. We're destroying the American dream. Small businesses dying left and right. People not being able to go back to work. If you're going to shut down the country, if you're going to shut down the country's economy, you have no choice but to basically provide stimulus. And it's going to come at a great long-term cost. The ripple effects of this economic shutdown is enormous and generally not looked at. The mental health issues in the United States are enormous. Suicide rates are off the charts. Small businesses dying in mass. The American dream at risk. I mean, it's going to take a long time to get the world running again. You can't just keep shutting the world down. I'm of the opinion that we should protect those that are at risk, and the rest of us need to go back to work and make sure that we keep the world turning.
Brock, is there any chance the stimulus package is coming before the new president gets inaugurated?
Well, that's a good question. I would think so, considering the lockdowns, and we don't know when that inauguration is going to take place. It should be in January, but depending upon how things go with Trump's contesting of the election, it's possible that Nancy Pelosi will be our next president, at least as an acting president temporarily. Though it does look like things will most likely go smoothly. Trump, again, is supporting the transition team, and so we might see a stimulus package in the short term. If you had asked me yesterday, I'd say probably not. But considering the events of today, I'd say the odds are probably good.
All right. Well, the lines are going crazy, so I'm not going to encourage more people to call in because we do have to let Brock go. He has been here for much longer. I'm going to take one more call for Brock Pierce. I'm going to take Stefan Lush. You're live on Crypto Banter with Brock Pierce. Stefan, are you there? Stefan Lush, are you there?
Yeah, I'm there, but I was expecting to be there with Nate. So I thought Nate Hindman first.
No problem. We'll take you back. Brock, it's been a great pleasure speaking to you as always. I must say, I don't know anybody that has influenced more people to get into crypto than you have. When you speak to crypto OGs and you ask them when or how they got into crypto, the answer is always unanimous. It's always Brock got me into crypto. So thank you very much. Well done. Keep doing what you're doing. Thanks for coming on our show.
Thank you for having me.
Thank you, Brock. Nice to see you, my friend. And just to remember that if you are enjoying this, click the like button now, hit the subscribe button now. That tricks the YouTube algorithm to making or to bringing this content into more people. We are going to be back after the break. We're going to be talking about DeFi, and we're going to be asking whether you suffer from impermanent loss.
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
Welcome back. Welcome back. This time we're talking DeFi. And for those of you who have been playing in the DeFi game, no doubt you've suffered from what they call impermanent loss. Tonight we're going to be talking about DeFi and impermanent loss, and we're going to be speaking to someone from the team at Banter. We're going to be speaking to Nate from the Banter team as soon as we can bring him in. Nate, welcome to our show.
Hey, how's it going? Can you hear me?
How you doing, Nate? Where in the world have we found you?
You have found me in Tel Aviv, in Israel.
You're our second guest from Tel Aviv today.
Really?
Nate, yeah, we had Shachaf Bar-Geffen from Koti.
Once the Israelis show up in crypto, you know we're back at the top. So no, I'm just kidding.
So Nate, I want to take you back to Banter because
yeah.
If we take the history of Banter raised a lot of money. In fact, if I'm correct, they raised over $170 million in an ICO. Is that
so?
Are my numbers right?
It was 153 million in ETH at the time when ETH I think was around 350. So that was the largest ICO of its time in June 2017.
And then we never heard much from Banter. We heard a little bit here and a little bit there. And then in the beginning of this DeFi explosion, I think Banter was the one that actually set it off. What happened?
Wow. So many different reasons. You know, hindsight is really 2020. I guess to simplify it, we started hearing of a name called Uniswap, which I'm sure you've heard of, and which I'm sure your impermanent law, some of it at least, is coming from. Effectively, Bancor was the originator of the AMM model. Uniswap was inspired by Bancor, and effectively what it did was rip out the BNT token. So whereas all pools on Bancor exist with a paired asset that is BNT, the pools on Uniswap exist with ETH. And so at the time, this really reduced a lot of friction for users to use ETH as the reserve asset. When you contribute to a liquidity pool, you're contributing one asset and then its reserve asset. In the case of Bancor, that was BNT. In the case of Uniswap, that was ETH. And more users are just holding ETH, right? So it's easier for them to contribute to these pools. But, and what we'll dig into, is there's a really big risk of being a liquidity provider. You're essentially playing Russian roulette with your tokens. If one of the tokens in the pool moons, you can actually end up selling off that token and being worse off than if you had just held both tokens on their own in your wallet. So you can really get wrecked as a liquidity provider, right? So whereas Uniswap was really able to sort of take the stage and by using ETH in its pairs as opposed to BNT, I think that decision is actually starting to catch up with it. And we're seeing that liquidity providers don't want to be exposed to multiple assets. They just want to hold a single asset exposure and really not be subject to this massive risk of impermanent loss when there's any volatility in the reserve asset.
Okay, so let's again take a step back for some of our viewers here, because we know that DeFi in itself is pretty complicated. When you're becoming a liquidity provider, let's say you're becoming a liquidity provider for a APY token, for example. Mm-hmm. What does that actually mean? What does it mean when you're becoming a liquidity provider?
Sure. So the real innovation of AMMs, or automated market maker DEXs, is that whereas in the olden days, it was just these professional market makers or really sophisticated traders that could provide liquidity to tokens on exchanges. What AMMs have allowed you to do is anyone can act as a liquidity provider and can generate fees from trades that pass through a liquidity pool or an AMM. I'm going to use those terms interchangeably. So effectively, if you're holding this APY, theoretical token, you're holding it, you want to stay long on it, assume, but in order to participate in an AMM, you have to stake the APY token and the reserve asset.
Which is Ethereum in most cases.
Which is Ethereum in most cases. And so you're effectively splitting your asset into 50-50, and you're staking those in a smart contract. And then this pool can process trades in the APY token, right? So anyone who trades against that, is the pool is extracting a fee that's getting redeposited into the pool, and it's making the liquidity grow, and you're able to generate yield off of these fees. And really yeah, go ahead.
What happens if I stake an equal amount or an equal dollar amount of APY and Ethereum goes up and APY goes down?
So the way AMMs work is they require arbitrageurs to rebalance the pool. So effectively, if there's a trade in one direction, an arbitrager will make a trade in the opposite direction, and that'll sort of bring the pool's price to the same price to match the external markets, right? So when one of the assets is going up or mooning, the way the pool works is it is selling off that asset to arbitrageurs, right? So it's selling it for the other asset in the pool that's going down in value. So you can actually end up with more of the asset that is decreasing in value and less of the asset that's increasing in value. And it's effectively arbitrageurs that are really the winners in this game. The money's coming out of the pockets of liquidity providers, and arbitrageurs really end up extracting a whole lot of value, especially in these volatile markets.
How serious is this potential loss? I mean, if Ethereum goes up 20% and the APY token goes down 20%, what have I lost? Where am I then sitting?
So let's say, the exact numbers is hard to calculate off the top of my head. I can only share, let's say, before I got on the call, I looked at a couple of the pools that, the DeFi blue chips, where a lot of users are staking tokens. And we have a really cool tool that I can link to in the chat where you can effectively put in an asset and see what your returns are versus the impermanent loss. And if you look, say, at Link or Wi-Fi, USDT is another. Wi-Fi is, if you had started staking in its AMM, let's say 2 months ago, you'd be down something about negative 60%. And that's during a time when Wi-Fi was increasing in value a lot. Link is down negative 30% over the past 2 months if you were staking in the Link liquidity pool on Uniswap. Stable coins, even stable coins aren't safe from this issue. USDT is down negative 30% in recent weeks on its Uniswap pool. The real disconnect that's happening too is a lot of LPs are getting lured into these AMMs because they see APY 500%, 400%. They're getting really lured in by these metrics, but they're super misleading because they're not taking into account that your principal liquidity can really just get wiped out by these arbitragers. And so
I have to take a step back here because I want to make sure that I understand it. If I stake 50 ETH, and the equivalent amount in another token, let's say 1,000 of the other token, is it not that I keep holding 50 Ethereum? So in other words, if the other token goes down, am I 50 ETH, not still 50 ETH?
So actually, if the other token is going down, you would be selling off your Ethereum because the Ethereum is rising in relation to. So those 50 ETH are being sold off. So there's less of those tokens in the pool, and the token that is going down is there's more of those tokens. So the token that's going up on the external markets is being sold off for the one that's going down. So pretty much the opposite of what you want. Unless, now listen, to be fair, this might be a trading strategy for some people, right? So as an asset is going off, maybe you want to be taking gains, and as an asset is decreasing in value, maybe you want to be buying it on the way, right? So this is an automated way for that to happen. But in most cases, and really the promise of AMMs is you just want to stay long on your tokens and you want to be a passive market maker. You want to have sort of the lazy liquidity do the work for you. And really go ahead.
I want to actually show our viewers how serious the impermanent loss actually is. So I've got a impermanent loss calculator. I got this calculator at baller.netlify.app. And it shows what happens when you stake two assets. So let's say that Ethereum goes up by 30%, but at the same time, the other asset that I'm staking goes down by 20%. It calculates that the impermanent loss in this case is I lose 2.88%. That's not very scary, but look what happens if Ethereum goes up by 50% and the other asset goes down by 50%. You now lost 13.4% of your capital in impermanent loss. That's a huge number.
Pretty scary.
So what's the fix? How do we fix this? How do we can't be carrying on losing huge numbers every time Ethereum goes up. What's the fix?
So Bancor has just launched its Bancor V2.1 version. And the two key features there, one is that you can just stake just the token. Just the token. You don't have to have any exposure to any other token in the pool. So you can maintain 100% exposure. For instance, say I'm staking 100 Link, and Link doubles during the time I'm staking, and my pool worth is now 200. I can still pull out 200. I'm not going to be suffering this impermanent loss that's going to make that an issue. Now, the other key feature of Bancor V2.1 is this idea that we've introduced called impermanent loss protection. And that is effectively saying that if you, it kicks in really after progressively. So the impermanent loss protection is growing by 1% each day, all the way up to 100 days. And after 100 days, any impermanent loss that you've suffered on the pool in the past or any going forward is fully compensated by the protocol. And really what we've done is we've taken the idea of impermanent loss and we've removed it for liquidity providers, and we've shifted the risk onto Bancor protocol, right? And so the BNT holders are taking on both the risk of impermanent loss, but they're also taking on the rewards. And I can really delve into kind of the mechanics of how that works.
So before we let you delve into the mechanic, we do have a caller who has been waiting on the line to speak to you for quite a while. He called in while we were on the line with Brock Pierce. Stefan, I'm going to bring you in. Stefan, welcome to our show. You called in to speak to Nate.
Well,
what do you want to talk
a
about?
caller. Nate brought me in because I wrote the economics paper for them. So I'm
amazing.
Sort of, the economic support for Nate, if you so want, for the more technical stuff.
All right, so Nate, talk to me about the model and how Bancor holders take the risk, and obviously they must get compensated for it.
Yeah, so essentially this is how it works. Let's say someone comes with 100 link, right? And they're depositing that on one side of the pool. Bancor protocol will mint new BNT and deposit it the same value on the other side of the pool. So effectively, Bancor protocol is co-investing alongside these LPs. And the protocol is also generating revenue from the capital that it put into this pool. And it is using this revenue, these fees from the protocol invested BNT to pay out impermanent loss and also to buy back BNT. So to reduce the overall supply of BNT. So it's really turned BNT into both an inflationary and also a deflationary asset. It's an elastic asset, and that's really how we've figured out how to solve this issue.
And who decides which tokens or which pools BNT token holders are willing to risk? I mean, there's so many rug pools and stuff like that. Who decides? Is it the community decision as to which pools BNT token holders are going to support? How does that work?
Yeah, so coinciding with the launch of V2.1, we also launched the Bancor DAO. And so this was fulfilling our vision to really decentralize the protocol. And effectively, there's a whitelist of tokens that are approved for impermanent loss protection or impermanent loss insurance, and also single asset staking. And we wanted to make sure the whitelist was actually quite large. So there's about 60 whitelisted pools so far. And BNT holders can vote on adding or removing pools from that list. And so obviously if there are pools that the governance thinks are potentially subject to rug pulls or are really untrustworthy tokens, they typically won't vote those in to the whitelist and offer them these features of V2.1. So,
and when does V2.1 actually launch? When do we get to play and to participate in V2.1?
So it launched just a couple weeks ago. It is currently live. There are current people that are protected against insurance, that are protected against impermanent loss. You can stake single asset exposure. Since we've launched it, we've also launched BNT liquidity mining. And so effectively what we're doing is we're dropping weekly distributions on strategic pools. There are 8 pools that are now receiving rewards. So getting dropped in between 100,000 and 200,000 BNT on those pools. And we've seen really liquidity explode in the past week. I think it's gone up something like 5x. We're now near 100 million in liquidity. We have thousands of liquidity providers that are generating fees, and also it's protected APY. It's not the APY that you'll see in these other DeFi dashboards where you can just actually get wrecked. You know that your principal is protected and that these fees are just kind of pure profit on top of your stake. So it is fully live. And Ran, I saw you tweet out recently that you've been getting wrecked by impermanent loss. And so you have to be staking with protection at all times. And really this was what this call was for, is to make sure that you're doing this whole thing with protection. I know those returns are juicy and can pull you in, but I don't know if the risk is high enough.
So I must say, and this is probably a cautionary tale to other people who are playing in DeFi, the returns seem to be absolutely amazing until you try and withdraw your capital. and you try and withdraw your capital after one of the tokens has collapsed, or where ETH goes on a 50% run, and at the end of the day, you've actually missed the whole ETH run, and you're left with much less ETH and a whole lot of shitcoins, which have crashed where all the liquidity have been out. Now, the next guest on our show today is actually Lou Kerner, and he's a huge Banter fan. Lou, welcome to our show. I know that you are a huge Banter fan. Welcome.
Yeah. Hey, Ran. Hey, Nate. Good to see you. I've been a huge Banter fan since they launched a couple years ago. I mean, they were really the original AMM. What Uniswap did was basically copy Banter and use ETH instead of the BNT token, and it turned out that was a better business model. But in my view, Banter has a tremendous history of innovation, and solving impermanent loss is just the next step, and I think a major move forward for the industry.
Nate, how does Banter compete with Ethereum, with Uniswap, when Uniswap uses the Ethereum trading pair and Banter doesn't?
Yeah, so effectively, we don't think that most liquidity providers want to split their holdings, even if they hold ETH. They don't want to split their link or their other token into ETH or into BNT. So when you stake, you're staying long just on those tokens. So you don't have to make the decision, do I want to split it into the ETH reserve asset? Do I want to split it into the BNT reserve asset? So that's really how we compete. We say, don't split your tokens up. Maintain 100% exposure while you're contributing liquidity and generating those fees and mining rewards. And we really do think it's a better proposition for LPs. And to be frank, I would say in the first 2 years of Banter, we were kind of uneasy about pushing users to contribute liquidity because we were aware of this pretty massive risk. And
Nate, when did this whole world of user liquidity actually further rise? When did this thought arise? Because I know now it's become commonplace in this whole DeFi explosion, but when was the first time that Banter realized that users could provide liquidity through a protocol?
Wow. I think we've been, messing around with this primitive since early 2017. And I think we really approached it in the early days as a solution for traders, right? And early stage token projects. Token projects can't pay the listing fees on Binance. They want instant liquidity, on-chain algorithmic liquidity. And we thought all of a sudden, well, what if that liquidity could come from its own holders instead of them just leaving their idle capital collecting dust in their wallet? What if they could just stick that in an on-chain decentralized receptacle and create this liquid on and off ramp? So we really approached it first from a trader's perspective, but then we started thinking, if anyone can contribute liquidity, you could get more liquidity and better prices than even the best centralized exchanges in the world. We're even seeing on some of these tokens that you're able to get better rates in an AMM DEX than you can on Coinbase or Binance. So, it's been a long time coming, but I think in the past few months, we've seen the AMM DEX world just explode. And that was really, go ahead.
Nate, we've got a caller coming in. His nick is MBR. MBR, you are live with Nate, myself, and Lou Kerner. What do you want to talk about?
Good evening, gentlemen. I hope you're doing very well.
Where are you calling from?
MBR.
From Melbourne in Australia.
Oh man, what's the time in Melbourne in Australia? Isn't it like the middle of the night?
Yeah, it's 3:30 a.m. on Tuesday.
All right.
So are you
on Wednesday? My apologies.
Are you aping into altcoins at 3:30 a.m. or did you just stay up to listen to our show?
I just stayed up to listen to your show, actually.
Amazing. Well, what do you want to speak about, man?
Yeah, so I wanted to ask Nate or the Banter team in general, I suppose, that Banter invented the AMM. And they were here before anyone else with a really good idea. And then we slowly started to see these clones of version 1 of Banter sort of start to really absorb a huge amount of that DEX liquidity and then eventually grow to become the dominant market forces in the space. Like, why do you think it turned out that way? Or could it have been done differently?
Yeah, I think it really speaks to the fact that, in the short term, contributing both the base ERC20 asset and also the BNT token was a pretty heavy lift for users that are just kind of dipping their toe into AMMs. And I think the fact that we have said you never need to hold BNT, you can contribute just the ERC20, or you can hold BNT and stake that and get, pretty high APY on those stakes. But I think these past few years, it's really been, just stake. It's easier if it's just ETH is the reserve asset. It's not that difficult. And also, these are really tricky vessels or, mechanisms, AMMs. They look really tempting on the way in, but as we're finding on the way out, when you pull out, it can be, you can really get wrecked. So I think the learning curve has been, has been pretty steep. And also the whole yield farming craze really, obscured this issue of impermanent loss, right? If you can generate more from yield farming, then you get hit with impermanent loss, then it seems like a good deal. But yield farming rewards inevitably dry up. And also, it's really expensive for the protocols to drop so much tokens on these AMM pools and have them get, sucked up by arbitragers. I often like to say that we thought we were getting, decentralized liquidity, and what we really got was a gold mine for arbs to just come in and snatch up money from liquidity providers' pockets.
Nate, does this remind you of the 2017 ICO craze? I mean, these protocols, I'm not going to call them shitcoins, yielding 30,000%, starting off at $20 and then ending up at 10 cents, but yielding 300%. I mean, it feels awfully like the 2017 ICO run.
Yeah. Anyone who knows anything about sort of economics knows that when they look at, 500% APY, they know where's the yield coming from. And if you don't know where the yield is coming from,
it's coming from you.
There you go.
It's coming from you. Okay, now the lines are going crazy, so I'm going to encourage everybody to like and subscribe, like and subscribe, like and subscribe. The more you like, the more times you hit like, the more times you subscribe, the more the YouTube algorithm gets us out to crypto enthusiasts. We've got a lot coming up on the show. We've got Lou Kerner on the show with us today. He's been around for a while. He's going to talk about stable coins. We've got a whole panel. We've got Adrian Bashuk, who's going to be talking about what's happening on social media. We've got a whole lot of callers. I'm going to bring in another caller. His name is Bill A. Bill A., where are you calling from? Bill, are you with us?
He's in the bathroom.
Going once. Going twice. And Bill's gone. The next caller we've got on the line is Laurie Koval. Laurie Koval. Laurie, are you with us? Oh, wait, I see. Oh, we have got Laurie and we've got Bill back as well. Laurie, welcome. You are muted. Welcome to our show. Where are you calling from?
I'm calling from New Jersey.
Oh, amazing.
I have a question for Lou.
For Lou. Lou, what do you want to ask Lou?
Where do you think... I wanted to ask him, where does he think that Bitcoin is going this bull run?
Yeah, look, that's a great question. I wish I had the answer to that. We can take a look at kind of the multiples from the low of the past bull runs have all been 100x's.
So you're thinking another 100x?
Yeah, well, the low was in the low threes. So, I mean, that's just one of the historical, I'm not a technical analyst. I'm not a chartist. But to some degree, that's all there is to do with Bitcoin, right? There are no fundamentals. On the fundamental side, I compare it to gold, and from there, at $100,000, it's not even, a 20% of gold. So, I think we have a massive way to go. I think Nate, when they were asked about, Uniswap, the question, and the question was asked as though kind of Uniswap's the winner. And I don't even think to the large degree we've even started yet. This whole industry is so tiny. And it could be Uniswap, it could be Banter, it could be one of 1,000 companies that are going to enter in this industry in the next few years as innovation just skyrockets.
Who was it that said that humans often overestimate what they can achieve in a short period of time and underestimate what they can achieve in a long period of time? Was it Bill Gates who said that?
Bill Gates is saying that. The earliest instance of that I've seen is Roy Amara, who was a professor at Stanford University in the early 70s. And he was running the Center of Innovation, and he coined Amare's Law, which is that the impact of all great technology is overestimated in the short run and underestimated in the long run, right? And that's everything, and that'll be crypto. Even for us, even as wildly bullish as we are, I bet you it exceeds all of our expectations in 20 years.
All righty, Laurie. Well, thank you for coming on the show. We do have some other callers on the line. We do want to give everybody a chance. I hope that Lou managed to answer your call. We got Bill A back. Bill, you're live on the show with myself, Lou Kerner, and Nate from Banter. What do you want to speak about today?
You know, one thing I'm trying to struggle with over here is ways to play Bitcoin through ETFs. And I'm kind of surprised that Bitcoin's not a complete and total secret, that there's not a really good array of choices. And I don't understand why, because the one that's out there that Lou has spoken about in the past, GBTC, the relationship has actually kind of broken down if you look at them between the two, where the GBTC is just so outperforming Bitcoin. Believe it or not, it's a high quality problem if you're long, but it gives one a sense, at least me, a sense of, you know, disconnectedness to Bitcoin itself. And while it's nice on the upside, it scares me on the downside, where it's just not, I'm not looking to do better than Bitcoin. I'm just happy to do Bitcoin. So is there something in the mechanics of that, or should we all be partnering on trying to get like an ETF in the space going, because this one doesn't work as well as it should? I don't know if you look at divide one by the other, you look at the relationship over time.
Bill, repeat after me. SEC. It's the SEC. The SEC and the regulators are bottlenecking or stopping any Bitcoin ETF from coming through, and therefore the only BTC ETF type products are trading at ridiculous premiums. Lou, is there any reason to buy the GBTC and pay the 20% premium that it's trading at?
Yeah, I think the reason is because, actually, as Bill mentioned, what actually happens in a bull market with GBTC is the premium expands. You know, I appreciate Bill doesn't want to take the risk of the premium. He just wants to get the GBTC return without that additional risk. But I think, you know, it's actually right now, I think trading within the normal range. And my guess is you're going to see it expand over the next year as Bitcoin goes on its run, because that's the easiest way to get in.
Now, you know, isn't there arbitrage?
In the long run, is the 2% fee you pay.
But isn't there a huge arbitrage today of buying Bitcoin? I mean, just going out into the market and buying Bitcoin. We can hear you. Isn't there a huge arbitrage today of buying Bitcoin?
My mic. I can't hear.
No problem. Is there an arbitrage of buying Bitcoin today, investing it into the BTC Trust, and then cashing out the BTC and the premium?
Well, I mean, the premium is a constant, you know, and it trades within a range, and the range is actually pretty broad. But over the long run, you know, I mean, one of the interesting things, Nate, about the whole impermanent loss thing is I spent more time is right. I mean, the longer you hold a position over time, the you know, the beta decreases, right, of the impermanent loss.
It really depends what the assets do. If they, you know, impermanent loss is real
on average, right, with all the data, if you look at it.
No, I think, I don't know if time is really a reliable variable in the equation. I think that, you know, it's impermanent loss is such like a tough thing to predict and so asymmetric. What we have seen is if it's spread across a larger number of pools, that you can sort of diversify your risk. But the amount of time that you're in the pool, we haven't seen a correlation between that and impermanent loss.
Yeah, there was, and now I'm sorry that I forget his name, because I got to tell you, it was an incredibly great, insightful. I learned so much from it. Some guy wrote a very in-depth report about impermanent loss and about the expected returns from the insurance and such. Do you remember what that paper was called?
No, not ringing any bells. This is specifically about Bancor's insurance model?
Yeah. Diving deep into, it was very academic, even for somebody like me. I mean, it's very dense, but I learned a tremendous amount about impermanent loss, and again, that over time, the variance over period, that there's basically a reversion to the mean.
So actually, the author of that paper was the guy who called in earlier, Stefan. I don't know if he's still in the
waiting room. Stefan. Yeah, I was wondering if that was him. Yeah, that's funny.
So Stefan is on the line. We're going to add him, but guys, we are running out of time. Stefan, quickly, your comments on that paper.
Sorry, I'm there. I was kind of not entirely listening. So tell me again the question.
The question? I was just Stefan. I didn't realize that was you when it was. But I was telling them about your incredible paper on Banker and how much about impermanent loss, and about like one of the things that I learned was how time, kind of decreases the beta or the variance, right?
I mean, you get this because effectively the impermanent loss is based on the volatility of the two assets. So the two assets in the pool are going to diverge over time, but you're going to get generally a square root dependency, whilst your fees include linearly in time. So over time, fees in a strongly traded market should always outperform impermanent loss. But in the short-term horizon, impermanent loss can really, really bite you, especially if you have market jumps. And obviously, you need to formalize this a bit. So the mathematics of this is relatively easy, that in the long run, fees should make up for protocol loss, and this is what essentially what the Banker model is based upon. It said, look, we take all these fees, all these trading fees, and we're gonna use them to finance the insurance. We mutualize the losses on the impermanent loss.
Alrighty, guys, we've got to end this discussion around impermanent loss. We do have one more caller, which I'm going to let on the line. His name is Isaac. Isaac, welcome to our show. You're live on air on Crypto Banter.
I've got a question about Uniswap.
Well, before you ask the question, we want to know where that interesting accent is from.
I'm from Dallas.
Woo! Amazing. Woo! Okay, so what your question about Uniswap is?
When are we going to destroy Uniswap and have Banker take over Binance and destroy the world?
Nate, I guess that's a great question for you to check out on, Nate. When is Banker going to destroy Uniswap?
Well, we definitely don't want to destroy Uniswap or destroy the world. We think it's an amazing public good, and it's inspiring and humbling to see our sort of innovation explode into what has become Uniswap. But we do see a fundamental flaw in that model that we created, and it's our responsibility to fix that. And that's what we think we've done with Banker V2.1. So, but that's some classic Texan aggression there. I like that.
Well, Nate, thank you for coming on the show. It's been such a pleasure having you. Keep us updated of stuff that's happening at Banker. We've got to move to the next segment of our show, which is with Lou Kerner. Actually, before we get to Lou Kerner, we're going to cross over to Adrian Bashuk, who's been trolling the social airwaves, and he's going to tell us what's going on social media. But before we get to social media, remember, click the like button, hit the subscribe button. We want to get those likes up and get those subscribers up. The more likes, the more subscribers, the more the YouTube algorithm spreads our content to YouTube viewers such as yourselves. Be part of our community. Break news on our show. Hit the subscribe button. Hit the like button. Adrian Bashuk, welcome back today. You've been on the social airwaves. You've been talking Twitter, Telegram. What's going on the airwaves? What's going on in the social media circles today? Adrian, your mic is muted.
And there we go. Ren, this is an unprecedented time. We've got all-time highs in the Dow. It hit 30,000, and you've got Bitcoin nearing its all-time high. I mean,
wait. Did the Dow Jones hit 30,000 today?
It has hit 30,000. The Dow's up over 400 points today, and you've got this similar ascension with Bitcoin running parallel to each other. It's really unprecedented. The Dow is up 428 right now, literally 428.
Wow. What caused the move in the Dow Jones today?
I mean, you've got some markers of stability, right? Markets like stability. So you've got the incoming administration, so to speak, naming Janet Yellen as a Treasury Secretary. She served under the Clinton administration. And remember, 92 to 2000 was the biggest period of unabated economic growth, up 34% GDP. So there was a light touch, and there was working across the aisles. There was deal making, and a lot of people are looking at these moves in terms of the incoming economic teams. Also, CFTC and SEC using a lighter touch approach. We could see some growth run here and some stability. So the markets like stability.
Alrighty, and what's happening on the crypto Twitter and crypto Telegram social airwaves?
I mean, everyone's talking about it and saying, is this the top? If it's not the top, where are we going? And if we're going to hit 35K in Bitcoin, where are the alts going to run? And is there going to be another harsh pullback and retracement going into January? I mean, remember this time in 2017, we had this unprecedented run. We hit the top in December, and we had an 85% retracement. People are weary. So there's euphoria, but there's also caution.
But there's also a whole lot of new Bitcoin buyers. In 2017, we never had the institutions. We never had the funds. We never had corporate treasuries. And we never had GBTC buying up Bitcoin, PayPal buying up Bitcoin. There's a lot going on. Adrian, before we get to the social media news, I want our viewers to call in and tell us if they are part of a Telegram group or a Twitter group that we should be following. So, guys, if you're watching this and you're part of a Telegram group that we should be following us, let us know. Drop the link on Telegram at Crypto Banter, and Adrian Bashuk, our producer, will follow up and he'll join the Telegram group and give the Telegram group a whole lot of exposure. Adrian, let's have a look at what's going on the social airwaves today.
Welcome to the Social Sentiment, where we'll take a wide macro view of crypto across social to see where we're at and where the market could be going. Let's start off with the social headlines. Dare we say it? Alt season. Could it be here? The socials are hinting so. Ivan on Tech tweeting simply, hodl, hodl, hodl. Amen. But is this time different than 2017? Niraj from CoinCenter observing, the last time Bitcoin was at this price, there was an insane frenzy of media requests. It was torrential. This time, pretty much nothing. Could there be room to run? Russell Okung, the NFL football player, responding, nah, Bitcoin. But check out other alt majors like Cardano. Bisla Ryan exclaiming, that 1 hour ADA candle. My God. Continuing on to celebrate, this is it, boys. Welcome to 2017. Let's get this bread. Now, ETH 2.0. This would be a very different 2017 with products and protocols shipping. Vitalik announcing simply 524, 288. The amount of ETH locked into ETH 2.0. That's a real development milestone for the ETH community. One of the Spediacci twins proclaiming ETH is the most undervalued asset in the world right now, but not for long. Don't be the parent in 2030 that tells your kid you had the chance to buy ETH under 1,000 but didn't. To start, ETH hit 600, and apparently everyone was celebrating, even these two guys. Everyone, including Ivan on Tech, again. Don't forget your altcoin gems. While some are celebrating, others are diving deep down the altcoin rabbit hole, looking for some low-cap hidden gems, or launching new stealth projects. Keep an eye out for things like Slingshot. Or just check out Box Mining's YouTube channel or Twitter feed where he asks, stacking some alts, what are you buying? And let's take a look. We see a lot of RFI mentions, the NFT craze with Meme, Core, NDR, mentions of Link, Rose, Nex, Terra, Orion, DRC, DFT, Fuse, VChain, Track, XHV, QRX, NGM, ZAC, EGLD, YFD, some mentions of AVAX, WAX, more RFI, and polls. What are you looking at? Let us know here on Banter. So there you go. That's a look at what crypto Twitter is saying, some of the thought leaders, and some of the good memes running around, Ren.
Adrian, if you were to call, based on what you've been looking on in the social airwaves, if you were to call 3 tokens that are going to have the biggest run-up based on just social sentiment in the airwaves, what are they going to be? I'm going to write them down over here.
Yeah, I'm seeing a lot of mentions of Ocean. As I said, even yesterday, you saw the XRP Army, the Link Marines, and you've got the Ocean Navy. I mean, we met with the dev team in Berlin. This is the real deal. They're focused on big data. There's a huge upside and a huge potential for Ocean. A lot of mentions of Dia and Orion, kind of both on that Oracle front and on that decentralized DeFi front, or Orion and Dia. There's a lot of mentions of that. And then, I've got to say there's just a lot of mentions of making sure that you're looking and being aware of the top. So not suffering from that big drawdown that so many traders suffered in from 2017 to 2018.
Adrian, if you were to call it, are we near a little top, or do you think we're going to go? There's still a long way to go before a pullback.
Let's see today and into tomorrow, and even into the holiday. I mean, remember, we've got Thanksgiving coming up in the U.S. People are going to be off the charts with their families, obviously in quarantine, and a lot of people think that because there's a lot of lockdowns in place, there's actually going to be more trading happening.
There's definitely going to be more,
not less.
There's definitely going to be more trading. Adrian Bashuk, thank you very much. We'll see you again we'll see you again tomorrow with a social report. Adrian, tomorrow we want more tokens. We want to buy and sell. That's what this show is all about. Next up, we've got Lou Kerner coming in, and he's going to be speaking about Bitcoin, stable coins, and a whole lot of other coins. We'll be back just after the break.
Crypto Banter is the world's first interactive social cast for the crypto community. Get the latest news, views, interviews, and live conversations with crypto enthusiasts from around the world. This is where you call in, you make the show, and you bring the banter. That's CryptoBanter.com, where you talk crypto.
And for the last time before we go today, if you are watching this and you like this content, hit the like button, hit the subscribe button. The more likes, the more subscribes, the more the YouTube algorithm brings this content to other crypto users. If you want to talk to Lou, you can call in on any one of the numbers displayed on your screen. We've got Twitter, we've got Telegram, we've got a US call-in number, we've got call-in numbers for every other country in the world, and you can go to the website www.cryptobanter.com. And there you can click on the widget or the call now button, and you'll get through to the studio anonymously, because we know how important anonymity is to the crypto community. Lou, welcome back to the show.
Thanks. Have you mentioned how people should, hit the like button and subscribe?
Many times.
Okay, good. You guys all should. What Ran is doing here is great for the community.
The more information, the more, Lou, there's no real-time live streaming crypto platform. There's no CNBC, there's no Bloomberg. We want to fill that gap, but we want to get the information from the community. So we encourage the community to call into our shows, to make the news, to break the news. We want to bring the banter of Telegram and Twitter to a more moderated, credible, streaming live medium that you can sit at your desk and you can watch.
Yep. Yeah. Look, this is CNBC has been a thing for a long time, moved lots of markets. And I think that we're going to be a lot smarter about how we leverage, media and get the news out there and get the community.
All right, Lou, let's talk about stablecoins, because that's what you came on to speak about today. If you look at stablecoins, you got Tether it was the number 3 coin in terms of market cap. It's now the number 4 coins in terms of market cap, with $19 billion in just US dollar Tether. Where is the stablecoin market going?
Well, first, it'll be number 3 again, is my guess at some point.
And that's not because Ethereum or Bitcoin are going to come down, right?
Exactly. But you know, what gets me super excited about stablecoins is the fact that it's really going after the $20 trillion US dollar market, which grew this year by about 25%. So it's this massive, massive market. It's growing rapidly. And up until recently, it was a monopoly. And so we're about 24 billion in stable coins today. So I don't even think we're 1% of where we're going to be in a few short years.
All right. Now, as an investor, if you wanted to capitalize on the growth of stablecoins, where would you put your money today?
Yeah, I mean, there are some, projects that are pretty far along doing some interesting things, like Cello and Reserve. And so you can buy, their tokens. They're not stable coins, but, they're associated and creating value via those stablecoin projects. And then there are a lot of other companies that are out there, that are harder to get. Circle, is a private company, but people are invested in that company. And then it's a lot of smaller guys that I think are doing super interesting things. Like I have a weekly show called Stablecoins Are Killing It every Thursday at 1 p.m. And this week's guest was Stably. And they just, they're a platform to help others launch stable coins. They just launched, one of their partners launched a stable coin in Vietnam, just a couple days ago. Now, for the first time, there's a stable token there. And that actually addresses a lot of issues around their capital controls, that now for the first time, you can take money offshore legally in Vietnam.
Do you think that at some point, stable coins are going to be bigger than Bitcoin? Do you think that people are going to migrate dollars and yen and everything else onto the blockchain and DAI and all the other stable coins? And do you think that we eventually land up in a position where the blockchain application for stable coins or for backed coins, asset-backed coins, etc., become bigger than the blockchain on Bitcoin or the value of Bitcoin?
Yeah, I mean, this is not in any way in a battle with Bitcoin, and I get the market cap question. I think Bitcoin can be huge. In my view, it's a store of value, and it's a $10 trillion gold market. I think that they could easily surpass. And this is a $20 trillion market today with dollars. And now for the first time, we're layering on technology on top of the dollar. So what a dollar can be, whether it's, we're dealing with privacy things, or, I look at them right now as kind of like credit cards, right? I mean, in one hand, all credit cards do the same thing. On the other hand, there are lots and lots of credit cards that all do, niche things that different people use to get different kinds of value.
Amazing. Lou, and we are in a Bitcoin bull market. We are in an altcoin bull market. Do you think that we are nearing the top? Do you think we're becoming a bit toppy? You've been around. You were here in 2017. To me, this feels almost like the beginning of the 2017 market. Certainly nowhere near the end of the 2017 market. What does it feel like to you?
Yeah, I mean, look, I totally agree with you. I have a joke that I have a word to describe the tendency of markets to go from bubbles to crash to bubbles again. And the word I use to describe that is capitalism, because that's what markets do. And every time we go, oh my God, oh my God, oh my God, and like we're surprised. And so, the question is, how far is this bubble going to go? And I think for it to be a bubble, it's got to go massively higher than whatever the last bubble is. Otherwise, it's not a bubble. I totally agree with what you're saying. There are so many buyers now of Bitcoin, and the supply is only going down. And, while to the people in the industry, it seems like a frenzy, it still rounds to 0% of the world cares about this.
Amazing, Lou. That is unfortunately all we have time for. It is 12 o'clock EST and we're off air at 12 o'clock EST. We'll be back tomorrow at 10 a.m. EST. Tomorrow on our show, we've got Mr. Max Kaiser. After Max Kaiser, we've got Vinny Lingham coming on our show, and we've got a whole lot of amazing guests tomorrow. Lou, thank you very, very much. To our viewers who are here and have liked and have subscribed, thank you very much. Thank you for your support. We'll see you guys tomorrow. We'll more crypto banter tomorrow, same time, same place, 10 a.m. EST, right here on YouTube.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station. Listeners are encouraged to do their own research.